In the next 10 minutes, you're going to face 10 big financial crossroads, and every decision you make will shape your future. Your wealth, your stress levels, and your opportunities are all on the line. Are you ready to see if you can beat the system? This isn't just a game, this is a crash course in the financial education you should have learned years ago. By the end of this video, you'll have the powerful tools to make smarter, stronger, and more successful money moves in real life. Let's get started. Crossroad 1. Understanding credit. First challenge: you're about to apply for your first credit card. Option A. Get a card and max it out because, hey, it's free money. Option B. Get a card but only use 30% or less of your limit and pay it off every month. The correct answer? Option B. And here's why: your credit score controls everything. Buying a home, renting an apartment, even getting a job. It all depends on it. Schools don't teach this, but you need to know it. Your credit score is based on 3 key things. Payment history. Do you pay on time? Credit utilization. How much of your limit are you using? Length of credit history. And here's a secret trick. If you pay your bill twice a month, you can lower your credit utilization even faster. Crossroad 2. Taxes. Next up, let's talk taxes. You just landed your first job. Your salary, $50,000. Option A. You take home the full $50K because, well, why not? Option B. You owe taxes and need to plan ahead. The correct answer? Option B. What schools don't teach you is that your paycheck isn't actually yours. A huge chunk disappears into federal and state taxes, Social Security, and Medicare. But here's the trick. Rich people legally pay less in taxes. How? Deductions, write-offs, and tax-advantaged accounts like 401ks and IRAs. If you don't understand how taxes work, you're losing thousands of dollars every single year. Crossroad 3. Investing early. You're 22 years old and someone tells you to start investing. Option A. You say, I'll start later when I make more money. Option B. You start now, even if it's just $50 a month. The right answer? Option B. Because of compound interest, that small $50 a month could grow into over $500,000 by the time you retire. But if you wait until 35, you'd have to invest triple the amount just to catch up. The earlier you start, the easier it is. Index funds, ETFs, Roth IRAs. These are the secrets to financial freedom. Crossroad 4. Budgeting and managing expenses. You just got your first paycheck. What do? Option A. Spend it all on fun stuff because you deserve it. Option B. Follow the 50-30-20 rule. 50% for needs, 30% for wants, 20% for savings and investments. The correct answer? Option B. Most people don't go broke because they don't make enough. They go broke because they spend too much. If you learn how to manage your money early, you'll never feel broke again. Crossroad 5. The emergency fund. Your car breaks down. The repair bill? $2,000. Option A. Swipe your credit card and hope for the best. Option B. Use your emergency fund. The best choice? Option B. An emergency fund is a lifesaver. It stops you from falling into debt when life throws unexpected expenses your way. Without one, a single emergency could wipe out your paycheck, drain your savings, or trap you in a cycle of high-interest debt that takes years to escape. Think about it. What happens if your car breaks down again? What if you suddenly lose your job, face a medical emergency, or need to cover an unexpected home repair? Without an emergency fund, you're left scrambling, borrowing money, maxing out credit cards, or taking out loans just to stay afloat. And that's exactly how debt piles up fast. This is why having 3 to 6 months of expenses set aside in a high-yield savings account isn't just smart. It's non-negotiable. It gives you peace of mind, security, and the power to handle anything life throws your way without the stress. Because when life happens, you won't have to panic. You'll be prepared. Crossroad 6. How interest rates work. Let's talk interest rates. The silent wealth stealer. You need to borrow money. You have 2 options. Option A. A loan with a 5% interest rate. Option B. A loan with a 15% interest rate. The right answer? Option A. But here's what schools don't tell you. Even a small difference in interest rates can cost you thousands over time. Let's break it down. Take a $10,000 loan. At 5% interest, you'll pay about $2,728 in interest over 10 years. But at 15% interest, that jumps to a shocking $9,111. That's over 3 times more for borrowing the same amount. And it gets worse. Credit cards? Some charge 20%, 25%, even 30% interest. If you carry a balance, you're literally throwing away your hard-earned money. The lesson? Always shop around for the lowest interest rates when borrowing money, and avoid high-interest debt, especially credit cards, unless you can pay them off in full, because if you don't, interest will keep you broke, while making banks rich. Crossroad 7. How to shop for the best deal. Any financial decision, always compare your options. Let's say you're buying a car. Option A, take the first financing offer without shopping around. Option B, compare multiple lenders, negotiate, and find the best deal. The correct answer? Option B. This applies to everything, from car loans to insurance, mortgages, even cell phone plans. A little research can save you thousands over time. Because here's the truth. Companies want your money, but you have the power to make them work for it. Lesson? Never accept the first offer. Compare, negotiate, and make smarter choices. That's how you win with money. Crossroad 8. Rent versus buy a house. It's time to find a place to live. Option A. Buy a house because renting is throwing money away. Option B. Rent because you're not ready for homeownership. Trick question. The real answer? It depends on your financial situation. Buying makes sense if you plan to live in the same place for 5 or more years. You can afford a 20% down payment to avoid PMI. Private mortgage insurance. Your mortgage payment is less than 30% of your income. Renting makes sense if you need flexibility, moving soon, uncertain job stability. You don't have savings for a down payment and home maintenance costs. Lesson: buying isn't always better. It's not about what people say. It's about what fits your lifestyle and finances. Make the choice that works for you. Crossroad 9. Where to invest your money. You've saved up some extra money. Now where do you put it? Option A. A savings account earning 0.01% interest. Option B. Stocks, real estate, or index funds that grow over time. Correct answer? Option B. Leaving money in a low-interest savings account means inflation is eating away at it. Instead, put your money where it works for you. Stocks and index funds, long-term growth, real estate, passive income, and property appreciation. Tax advantages for retirement. Lesson: saving is not enough. If you want to build wealth, you must invest. Let your money work for you. Crossroad 10. 529 Plan tax advantages. Thinking about future education costs? Here's a tax hack they never told you. Option A. Save for college in a normal savings account. Option B. Use a 529 plan for major tax benefits. Correct answer? Option B. 529 plans let your money grow tax-free when used for education expenses. And here's the kicker. Some states even offer tax deductions for contributions. Let's say you contribute $5,000 per year. By the time your child is 18, you could have over $100,000 in tax-free college savings. That's free money you don't want to miss. Lesson: if you're saving for education, a 529 plan is the smart, tax-friendly way to do it. Make your money work for you. All right, we've covered credit, taxes, investing, budgeting, interest rates, renting versus buying, and even college savings. But now, I want to hear from you. Which of these financial lessons do you wish you learned earlier? Drop a comment below. If this video helped you, like, subscribe, and turn on notifications because I've got more financial secrets coming your way. See you in the next video.